Hello and welcome to Pro Trader Strategies Market Commentary for Wednesday, January the 23rd. My name is Eric Wilkinson, and some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal for my commentary on everything from economic to geopolitical and market analysis. Please keep in mind that everything that we talk about in these market commentaries is not a solicitation to buy or sell any of these securities or strategies. At the end of the day, I am here to teach you some different strategies that you can then implement into your portfolios, but please do that in your own way. Also, remember, past performance of any trading system or methodology is not necessarily indicative of future results. All right, having that out of the way, let's get it on with some economic data. And sorry, no daily market commentary yesterday because I had jury selection. They're trying to decide whether or not I am going to be a juror. So that went all day yesterday, and at about 5 o'clock, they decided to say, well, out of 50, we're down to about 23, and we're going to have you guys come back tomorrow. So I am in the final running, unfortunately. So that being said, I'm doing this a little bit early, and probably am not going to be able to add a whole lot of positions throughout this because of the way that this is all set up. All right, so let's talk about some economic data yesterday because we got some really good stuff yesterday across the pond and here in the United States. Across the pond, we got out of Great Britain, the public sector net borrowing was a massive increase to 1.1, expected to be a 2.1 billion, expected to be 1.1 billion. So $1 billion over on borrowing over in Europe. Now, to me, that is not a good sign. That seems like we're very debtor nation on something like that with that much of an increase on a small area like Great Britain. It's not massive by any stretch of the imagination. So, I mean, it's pretty massive, but $1 billion of borrowing in 1 month is just absurd almost. Then in the United States, we also got existing home sales. Now, I think this is really one of the biggest catalysts to really cause that down move in the markets yesterday, as the markets were really way off for the better part of the day, and then that last hour rally, which was actually a good sign, I think, especially with the bearish tone going around throughout the day. That last hour of rally just really seemed like a pretty positive move. Just like when we were saying at the end of the days when we were seeing those real big sell-offs, that those were pretty bearish moves. Now, that was a pretty strong move towards the end of the day. I think that's a pretty good sign, but the economic data just is not really making me very excited lately. So we got those existing home sales coming in at, almost 5 million, expected to be 5.27 million. Now it was 4.99. That's the lowest reading we've seen since October of 2016, I believe it was. So almost 2 years. Now we do expect lower numbers, generally speaking. December and January are probably the lowest housing sales months out of the year. But that being said, we still saw a massive drop in that, and it has to do with higher interest rates, obviously. Higher interest rates and basically, an economy that is not firing on all cylinders. I think it's, what I mean that is just like it's not revving up. We are not, by any stretch of the imagination, overheating. We are just kind of trudging along like we are in overdrive in a sense, where we've gotten up to speed and now we are just kind of continuing. I don't see that we're doing anything great. It's just kind of, we're just moving along with traffic right now. All right, then today we got some other economic data points across the pond. We got the industrial orders expectations came in at negative 0.1, expected to be positive 0.5, so not a great number there. It's not a really widely looked at number, but it will give us indications going forward as to manufacturing and other things going on over in Great Britain. Then Canadian core retail sales came in at a negative 0.6%, expected to be a negative 0.4%. I don't usually talk about Canada, but with retail sales, that's going to be one of the bigger numbers there, and it's going to be reflective of us pretty much here in the United States. Core retail sales out of Canada came in at negative 0.9%, expected to be a negative 0.6%. Both those numbers revised down also as well from last month's reading. Then here in the United States, we got Richmond Fed manufacturing today. It came in at a -2, expected to be a -2. We've been seeing a lot of these Fed manufacturing numbers come in not very good, at least lower than expected. This one was in line with expectations, but I think because we've seen all of these other Fed numbers, they had the heads up on this and marked it as a negative anyway. So that in line with expectations, but not something we really want to see. And then basically starting tonight with Australia, I think it's Australia, it starts getting their flash PMIs, and then across the pond over in Europe, we get all of their flash PMIs tomorrow. So that's going to be a pretty important day, especially for global economic data points. That flash PMI, one of their main ones, is kind of like our Institute of Supply Management, the ISM. It's about as important as that for them. So those PMI numbers coming out tomorrow across the pond, we get our own, but that's not one we really look at, like I just mentioned. So let's talk about the overall markets. We've got crude oil trying to push higher right now, right in those, mid to lower 50 handle. That's where I talked about. I think that it's going to kind of settle down right around those mid 50s. And then on to gold. Gold coming off today, as yesterday we saw that rally happening as we would expect. The equities come off, flight to safety, put it into gold. We're seeing the equities move a little bit higher today, or at least have some strength. That's going to cause the weakness over in the gold market. I'm still under the guise that it's probably more valued around, or a better value around 1225 for this gold. I think that we're going to kind of see gold start to roll over a little bit as the equities slowly start to climb. We're going to get this little bit of a correction. I was thinking maybe a little bit more of a correction than we're already seeing, but eventually I think we're going to get a little bit of a correction before we start continuing higher. With the bonds, they're off today as well. Again, yesterday up on the day as the equities were getting slammed because of the economic data points, the Fed being behind the eight ball now with the economy. They just increased interest rates. They probably did too many. I was talking about that during that whole time, that there were different signals in the markets and in the economies that they should be pausing, and they never did. They did it 2 more times and waited till it was basically too late, which is pretty much in line with Fed history, that they always overdo it. All right, the VIX, after yesterday's move higher, because as equities come off, we get usually the VIX spiking. We're getting the equities move higher, and VIX coming off a little bit today. Let's talk about the Dow Jones Industrial Average, up over 200 points today. And the markets yesterday, that late day rally really made the prints look good. We can look at the NASDAQ. We were near the lows of the day, but the last hour had a big rally. Today we're starting to move higher. We're up about 50 points in the NASDAQ. That is off of yesterday's settlement. So markets really starting to push higher, despite the fact that we don't have really any economic data to support that move. It is really just trying to get back to those points of controls that I was talking about before we start settling down. So NASDAQ up on the day, Dow up on the day, E-mini S&Ps up on the day. That's causing bonds to come off, gold to come off, and interest rates to come off a little bit. All right, so E-mini S&Ps, daily chart. Each blue section is a day section. Each candle is a 30-minute candle. You can see that overnight inventory really tried to decide what was happening. This is that late day rally that I was talking about into the close. You can see it almost took back half of the day's losses, it felt like anyway. And then overnight inventories pretty flat, to be quite honest. Coming into into the morning session, we started getting a little bit of support, and off the open, spike to the highs. Today, right now, in this last candle, we're starting to see some of those weak hands cover. I don't really see any major moves happening today with all the economic data out already. I think the markets really are going to be waiting for tomorrow's economic data points across the pond and in the United States in order to really get us a more clear view as to what the overall economy is doing, and then therefore what the equities will do for us there. All right, now if you guys remember in the Qs, I had on a strangle in there. Market obviously not really going in my direction. I was expecting it to settle down, trade a little bit sideways, but we've had some push to the upside. It was looking to test my calls. It wasn't really quite that close, but I had on the 172 calls that I was short. But the market was starting to push higher. I was expecting more of a neutral. Yesterday's move back down allowed me to get out for very close to 50% of my max profit. Wasn't really expecting that big of a sell-off, but because I had jury duty, I put that in early in the morning just to leave it in there and got filled. So if you guys remember, I had on the February was short the 142 172 strangle. So short the 142 puts, short the 142 or 72 calls. All in all, I did that for $1.65, and I was able to buy those back for 90 cents yesterday. I think it was 94 cents. Sorry. Put that in, like I said, early in the morning. It was trading around. It was over $1. I think trading around $1.20, and I just put that order in with the sell-off. Was able to get filled. Wasn't quite 50% of my max profit, but again, I only had that trade on for about 10 or 11 days. So I would have hoped to have gotten to that 50% of my max profit, but with the market directional move, didn't really help me out there, and decided to take the opportunity when I had it, and that worked out pretty well. So very close to 50% of max profit, but just a little bit over by about a dime. All right, that's it. I've got to cut this out early, get this out to you guys, because I get another day of sitting downtown in a courtroom. All right, and hopefully they kick me to the curb and I'm not there for a week. So we'll let you know. I'll keep you posted. Everything is kind of liquid right now. We don't really know what's happening. So I'll let you guys know, try and keep you guys in the loop. But having said that, tomorrow's webinar kind of up in the air at this point. And, we're going to have to try and figure out something there. All right. If you can't take that, take it easy.